Let's bring on board Deven Choksey as well, who's joining in on the show. Morning, Deven. Let's get in your take then on Shriram Housing Finance. The fact that they are looking to sell their housing finance arm to Warburg Pincus. The deal value is estimated at about 4,600 odd crores. Your outlook?
Yeah, and good morning. Well, on one side, the housing finance space as a whole is growing and growing at a very steady rate of around 20 odd percent, as we are experiencing for most of the housing finance companies, including HDFC, including Bajaj Finance, and some others. So, I think from a perspective of looking at the growth related activities happening in this business, certainly I think the deal looks to be, I think, more promising than otherwise. On the other side, given the kind of balance sheet requirement that they would have because of the new housing related activity which is happening, including to the low cost housing, my take would be that I think the balance sheet strengthening process will have to be very systematic. And that's where probably I think likes of robust speakers would probably make more sense. They can write a bigger check and possibly, I think, allow this activity to grow faster. So I think on a comparatively smaller base of housing finance business that Shriram is having, I would think that they would probably have much better outlook going forward. As far as I think the growth in the business is concerned, we are very convinced about it. So let's wait and see how exactly the role they are rolling out this entire game plan. But I would remain optimistic about the possibilities.
All right, fair enough. That's the view coming in. Meantime, let's also get in your take. Just curious as to what the reading is then into Zomato, given the furious run up that we've seen. Do you believe that there's more legs to go, Deven?
Well, I think on a 1,70,000, 1,75,000 crore kind of a market capitalization at which this company is quoting, and even if you are basically annualizing the entire net profit which the company has earned in the last quarter, I think they should be somewhere around 1,200 crores. Even if Blinkit has to be taken into account, I think it would be, I think, around 1,200 crores or something, as the net profit would be for the company, on which I think we are seeing the market capitalization of 1,75,000 crore at this point of time. So from any perspective, if you look at it, unless the revenue book grows up very smartly, very handsomely, I don't think that I think this is going to be a sustainable kind of a proposition, because your growth rate in your net profit will have to be actually, I think, more than 100% year on year basis. Last year, it was a different situation. They were into losses. They turned around the company. They paid profits. Now, this year, I think they are already into profit. Their revenue model is stabilized. They have a competition in place. I think beyond the point, I think they cannot increase the price. These are all some of the headwinds that they face, against which I think the market has valued them fairly well. So, from my perspective, I guess I think unless the market gives the corrections, I think this kind of stocks do not become a meaningful entry point at this point of time into the portfolio. So, one school of thought would always argue that yes, I think these are the new generation of business, and probably I think they will keep on growing because of the change in the business model, like how they adopted Blinkit. I think this could possibly have a good argument, but I would still feel that the valuations are the going required to be respected at any point of time when you add stock into the portfolio.
Stay with us, Deven.
We'll have to spend a lot of time understanding that when market goes through this bout of emotional phase, which is what we are going through. Markets are reacting to every data point. Things like voter turnout are causing a 100 to 150 point swing on the Nifty. Bargains would start surfacing up. Where are you picking your spots? Because when the market goes through this emotional phase, historically I've seen that stock prices, they tend to get attractive.
Yeah, Nikunj, I guess I think some of the good quality stocks which are being hammered in the market because of variety of reasons, more technical than the fundamental. I think we believe in buying those companies into the portfolio at such point of time. And the names like Bajaj Finance, Bajaj Finserv, which we continue to hold, I think we get an opportunity to buy in the corrective market phase like this. So we keep adding them into the portfolio. Even I think the likes of Reliance, I think, which is fundamentally suggesting strength, they give a good response, they give a good opportunity rather, I think, to add into the portfolio. Tata Motors yesterday, I think, probably came down, and I believe that commercial vehicle story is unfolding. So again, I think the corrected down price, I think, is becoming an opportunity to buy into the portfolio. Fortunately, in this market, some of the large cap companies which are having a fantastic visibility about the earnings, of the in the business, they're still not quoting expensive and they have corrected. So that gives you the confidence that look, I think this market is more driven by the technical factors than the fundamental factors. If these stocks are available at a corrected valuation, I think we are accumulating and averaging these stocks in our portfolio once again of fresh, looking at next 3 years from now.
Deven, which is the standout mid-cap number for you in this earnings season where you are convinced that you will be a buyer and you will continue to buy if the stock falls 10%? You will buy more if it falls 20%. You will buy more if it falls even 25%.
I think clearly the recently the polycap numbers which came out, I think they are suggesting everything that one should be acting upon. No doubt the stock is putting at a adequately fair, high valuation currently. But the fact remains that I think the growth in the business is double every 2.5, 3 years from now on. So that is where probably I think one would get the confidence of buying the stock when the market gives a correction on one side. Similarly, I think we have seen the pipe business in case of companies like Supreme Industry for that matter, that the growth I think has been significant. We believe that I think if the correction in the price takes place, I think this is one area of opportunity which one could possibly ask for. Even the company like Astral, I believe, I think should be in a similar position once I think we see the result and all. I believe that I think entire building material segment in the universe in the market listed universe, I feel that I think these companies are basically showing reasonably good signs of growth going forward. So selectively, yes, I think in the corrective markets, one will definitely go for buying fresh into the portfolio.
Okay, fair enough. That's the cue coming in. Meantime, let's also get in a view from you, Deven, as to what the outlook is when it comes to, for instance, chalet hotels, Indian hotels. Both have been pretty impressive in terms of the performance. The companies have been talking about growing further, expansion, tourism, all picking up. How are you looking at this space?
Undoubtedly, Evan, I think for Indian hotels, FY25 would be the landmark year as we see it. About 25 new properties are coming under operations, which means I think we are talking about two per month kind of a number, which is, I think, quite a tall number as one can call it as, which is getting into operation. At the same time, I think from a very capital intensive business model, I think they have gone to the OPEX business model, which is fundamentally a very good shift. As a result of which, I think the return ratios on the capital and all, I think are definitely suggesting higher growth. On one side, we are seeing a constant demand from tourism, both in form of business tourism, leisure tourism, and now the spiritual tourism, which is getting added to the portfolio. I believe that I think these companies like Indian Art will definitely have relatively better numbers to talk about. Often, I do not have the number of rooms that they will be adding in one year, but I believe that I think these particular numbers are likely to be, I think, extremely strong. And FY25-26, the next year, could be, I think, showing a full reflection in the balance sheet of the company. So I think if one is looking at discretionary spending and one is looking at tourism as a sector, probably the beneficiary would be Indian hotel kind of a companies.
Okay. The fundamentals and looking at the size of the opportunity, which is the best Adani Group of stock according to you for next couple of months or for next 1 year?
So clearly, unlocking potential is significantly high when it comes to Adani Enterprise. You have the airports, you have the roads, and you also have the renewable portfolio which is being built into it, and also the data center business. Each of these businesses are going to find its own unlocking proposition in next years or so. In fact, I think once look at the port as well as I think the road business, they are actually helping the group in a way because of I think daily cash flows that they're generating. And that's where probably I think we are far more stable in taking the higher amount of capex program than ever before. So in my viewpoint, I think Adani Enterprise could have a better potential for unlocking the values for investors going forward in next 2 years' time.
What about the outlook on the entire capital goods space, Deven?
Extremely bullish and highly convinced about, I think, the growth prospects for each of the companies. You have basically, I think, the infrastructure play at this point of time, wherein your railways, your defense, your power generation, power transmission, renewable segments. Each of these areas are actually, I think, taking the next level of growth. And in the capital segment of companies, I think be it Larsen, be it ABBs, be it Siemens, or even host of mid-sized companies which are either in EMS segment or even I think some of them are ancillaries to some of the large capital goods companies. I feel that I think they are probably having relatively much better time going forward. On one side, we are having the Vande Bharat kind of a train program which has been extremely successful. Now, I think they are talking about the sleeper variants of Vande Bharat, and they are also talking about the local trains into Vande Bharat, and they are talking about bringing the bullet train going forward into the country with India's own technology. So, in my viewpoint, I think in the manufacturing space, again, I think with the capital goods players, I think connected. I believe that I think this is one segment, railways particularly, could be the biggest influencer as far as I think the growth outlook is concerned for many of the capital goods companies are concerned. So they are adequately priced today, but I believe that I think market gives opportunity in between. At that time, one should be grabbing such opportunity and buy into the portfolios.
Sure, okay, that's the take coming in on which way exactly the trade is going to head and what is it that you should be doing with cap goods positions. But Deven, good to have you on the show as always. We'll let you go on that note. Just settling down for the pre-opening.
If you like this video, then like, share and subscribe to ET Now.